When you hear that company's net profit increased about 300% year over year, you're probably thinking about some small growing company which increased its net profit from $1 million to something like $3-4 million. But today we are talking about Alibaba, and they are $250 billion company which did something pretty amazing in their Q3 results. So right now Alibaba is in this perfect storm of perfect conditions. Everything goes their way. Their quarterly results are amazing. Chinese economy is kind of rising and everyone starts to looking again and overthinking their expectation for Chinese economy for 2025. And US is right now at, well, how should I put it? Let's call it market uncertainty, because what's going on right now is US is kind of hard to explain. So today let's see how all of this had happened. So today we will talk about Alibaba's earnings per share, which grew 261% year over year, net profit which grew 333% year over year, and at the end we'll try to answer the most logical question: is it time to buy Alibaba? Now, before we begin, guys, quick note. We are sick and tired of making videos about NIO and SoFi all the time. So if you would like to see videos on other companies, other sectors, probably something more interesting than these two companies, press like on this video right now so we will know to make videos about something else. Hello and welcome to the Market Monkeys channel. My name is Vadim. We are talking about Alibaba's right now. Let's start with Q3 earnings because there are a couple of things there which are, well, quite amazing. First of all, Alibaba's revenue grew about 8% year over year, and most interesting parts of their business were international. So international commerce retails grew about 36% year over year, and the wholesale international grew about 18% year over year. Another big winner, of course, was the cloud business, which is getting more and more adopted in China, and it grew 13% year over year. And all of this money Alibaba, well, not all of this, but a major chunk of this money Alibaba is investing in their AI sector. AI sector, they actually have some very impressive achievements there. So in the last video about Alibaba, we have talked about Qwen 2.5 Max, which at its release caused quite a lot of news because its results, well, official results that were published, surpassed things like ChatGPT 4.0 and DeepSeek. So right now, Qwen 2.5 Max is probably the best model that we have right now in the world. Recently, Alibaba also have released their Quark AI model, and well, let's see, I think we still don't have results about this model, but as soon as we get, we will maybe make a video about this. Now, another big theme in Alibaba's earnings was their push toward efficiency. You might have asked when I talked about the Q3 results, you might have asked, how could this happen that the revenue grew 8% and net profit grew like 300 something percent? What Alibaba does in the past year probably is it offloads its most unprofitable assets and businesses and starts to getting more and more profitable with the businesses that they have right now. So for example, cloud business is taking more and more of Alibaba's revenue right now. And you can see this on the graph here that Alibaba's gross profit margin is climbing steadily for something like 2 years with one little hiccup on the way, but still the company is becoming more and more efficient at, well, making money. By the way, if you find this information valuable, interesting, press the like button, subscribe to our channel, and you can become a member of the Market Monkeys channel. Now let's compare Alibaba to the whole retail sector, and the comparison is pretty interesting because of two things. First of all, it's really ridiculous. You can see here like how much Alibaba is more efficient and more profitable than all the other companies in the sector. And second of all, take a look at the comparison of Alibaba today to their 5-year average. So you can understand that Alibaba is not only very good at what they're doing, they are actually not at the peak. So they still have some way to go. They still can be better and can be profitable even with these amazing numbers that they have right now. And this should be one of the first signs for you, if you're interested in investing in Chinese company or Alibaba, to kind of think about, okay, there is a runway here for kind of increasing the numbers. Now let's talk about kind of the second pillar of this perfect storm for Alibaba, about the Chinese economy. So in the past couple of months, a lot has changed. If you remember, last year Chinese economy was kind of lagging its 5% GDP growth forecast, and Chinese government did some weird things, promising stimulus packages and then releasing one and not really following up. And now we seen some news about some electronic devices purchases stimulus in China. So they tried hard to reach this 5% number. They could not do that. But it looks like the economy right now starts to boom. China by themselves set the target for GDP growth for 2025 at 5% again. And everyone were skeptical about this one, but right now we have seen quite a lot of revisions, and they're here in the table from Citibank, ANZ and Nomura Bank, and you can see that projections that were at around 4.2, 4.3% suddenly right now became 4.7 and 4.8. So China is getting there, getting to this 5% number. If you remember, in one of the videos about Alibaba, when I talked about how come in 2021 Alibaba was about $300 per share, I think, and right now it's about $100, despite the company actually being more profitable and having more impressive numbers. And there I showed you the graph about the institutional money, and that the average institutional portfolio had about 15% of stocks being invested in Chinese company, and right now it's below 5. So looks like this tide has turned, and more institutional investment are going to, well, invest in Chinese companies. And why are they doing that? Because let's talk about third pillar we have about the US economy. So what do we have in US? We have new layoffs from Musk administration. We have the new tariffs, which are popping pretty much, every 2 weeks, something like that. We have a lot of analysts which beginning to estimate what are the chances for recession. I read an article from JP Morgan analyst who estimates that the chances of US hitting recession is about 40% this year, and I would say this is pretty optimistic. Like, I would put it probably even higher. So all of this creates this huge market uncertainty. It's not that it's bad for economy. We can debate if tariffs are bad or good, but we don't know what is going to happen in 2 weeks. And when investors don't know, they are looking for more safe and more predictable places to invest. And right now, this safe haven for investment becomes, well, China and their company. So more and more companies in China, you will see them trend up. Take a look at this graph, for example. Since the second week of current administration, the indexes for S&P and for Hang Seng index, they are just diametrically opposite one another. You can see how US index is going down and how Chinese is going up. Now let's talk about whether you should invest in Alibaba or not. So first of all, of course, this is only your decision. I cannot make any suggestion or give any advice about your money, but I strongly urge you to take a look at your portfolio and ask yourself if you are diversified enough. And I'm not talking about like sectors, stock, bonds, stuff like that. I'm talking about geographically. So probably most of you are heavily invested in US companies, and kind of that's a shame because US is not going anywhere anytime soon, and we have different countries in the world who, well, are blooming right now, like China, for example. Our last video was about a company from Malaysia who operates in Southeast Asia. Julia did a great video on Grab. If you're interested, go and watch it. And if you are really interested in this opportunity, you can go and read her article on Seeking Alpha. By the way, I still think we have some affiliate links with discounts for Seeking Alpha, right? Yes, we do. So they will be in the description. Besides that, there are other interesting companies which are in different parts of the world. New Holdings is one of the companies which both me and Julia are holding, and they are from South America, for example. So in general, I urge you to take a look at your portfolio and to decide if you are geographically diversified. Alibaba, for example, is pretty good bet to diversify some of your holdings. Write me in a comment if you have some other interesting international companies in your portfolio. I would be very interested to take a look because, well, right now we're looking for companies like this. And let me know if you are invested in Alibaba and what is your outlook on, first of all, Chinese economy, if it will reach 5%, and when will all this end in US? Like, just all we need is some clarity and, not to have new tariffs every couple of weeks. Thank you very much for your time. Don't forget to like this video, subscribe to our channel, and we will see you in the next video. Take care.